Hey everyone, I'm Jen Sanasi, and you're watching CoinDesk Live. We are going to be coming to you from DC today, where CoinDesk's policy and regulation event is taking place. Now, we're streaming across CoinDesk's channels, bringing some of the most critical discussions around crypto regulation and policy to you at home. In DC, this is primarily a closed door event where the private and public sectors are meeting to advance crypto standards and reform. Throughout the day, we're going to get to listen in to a few special sessions where you'll hear from some of the top regulators and policymakers shaping the crypto conversation in DC. Now, why does this matter? For investors, entrepreneurs, institutions, and consumers, the stakes are high here. The choices made in regulatory frameworks don't just affect compliance, they affect competitiveness, financial inclusion, and ultimately the speed at which crypto becomes part of the global economy. So today it's all about collaboration, and you have a front row seat. We have general counsels, compliance officers, and regulatory executives from TradFi and DeFi all in one place. They're here to meet with public officials responsible for crypto legislation and regulatory oversight to collaboratively drive crypto policy forward. On the agenda are keynotes from a powerhouse lineup of speakers, including U.S. Senators Kirsten Gillibrand and Cynthia Lummis, and U.S. Representatives Tom Emmer, French Hill, and Richie Torres. We're also going to hear from SEC Commissioner Hester Peirce, known as Crypto Mom to the industry, and representatives from the U.S. Department of the Treasury and the White House. On the docket are discussions about the Genius Act for stablecoins, the Clarity Act to oversee crypto markets, and Project Crypto, which aims to modernize securities regulation. We're also going to be hearing about the latest developments in ETFs, the tokenization of real-world assets, and combating illicit finance. These conversations will impact how crypto is regulated, how it interacts with traditional finance, and how it can be used to create a more secure and healthy financial future. We're going to be bringing you this morning's sessions until about 10:45 a.m. Eastern Time, when we'll be taking a break for the morning. The sessions will start again right here in the afternoon at around 2:30 p.m. So set your alarms. You're not going to want to miss a single session. Now, before we get into it, let's take a look at how the markets are performing this morning. Bitcoin is at $113,264, while Ether is at 4,378. Let's take a look at the CoinDesk 20 index. Now, 4,135, down about 0.3% this morning. If you're just joining us, we are getting ready for CoinDesk's crypto regulation and policy event. You're going to want to be glued to your seat. Leave the programming on in the background while you're working, because we are going to hear from folks like Congressman Tom Emmer, Senator Kirsten Gillibrand, Comptroller of the Currency Jonathan Gould, Congressman French Hill, Senator Cynthia Lummis, SEC Commissioner Hester Peirce. We have Congressman Richie Torres, who will be joining the stream, and Executive Director to the President's Council of Advisors for Digital Assets, Patrick Witt. I believe that this is the first time we're going to be hearing from Patrick Witt publicly, one of the first times. So stick around. You're not going to want to miss this. In just a moment, we are going to be hearing from SEC Commissioner Hester Peirce for a keynote from DC. Now, if you're just joining us, we are live on CoinDesk's social platforms and the website. If you want to get involved in the conversation, feel free to comment below the stream. Feel free to engage with each other. The conversation does not only need to happen in DC, it can happen online as well. As you know, I host a regulatory show every second week, and the comments and questions we get there are so inquisitive. And so I love to see what you guys are saying on social media. So keep it up. Put your questions, put your comments below the stream. If we don't get to them today, we will definitely use them to inform our programming. So for everyone who's just joining the live stream, I'm going to remind you, we are about to head to DC for CoinDesk's policy and regulation event, we are going to hear from top decision makers all across the board when it comes to crypto legislation and regulation. We're going to hear from folks in the private sector and the public sector. And this is all about bringing folks together to advance the crypto conversation. It's so crazy because a year ago, it was really hard to get some of these people in the same room, and here they are all in DC, really committed to advancing this industry, committed to competitiveness, and committed to bringing crypto back to the US to foster innovation and support the entrepreneurs and business leaders here in the United States. So I'm just going to remind everyone again, join the conversation online. We love to hear from you. Put your comments on social media. We may even amplify the good ones if you have any thoughts about how we can better foster innovation and advance regulation here in the United States. As a reminder, we have general counsels, compliance officers, regulatory executives from TradFi and DeFi, all in one place. They're meeting with public officials. They're really going to talk about the conversation around the Genius Act and the Clarity Act and more to come to really put the US on the global stage when it comes to regulatory frameworks. As we know, jurisdictions like Hong Kong and Dubai have really been at the helm of regulatory clarity in this industry, but the US is definitely catching up. And as we've seen with several events this year, really committed to advancing the conversation on crypto. All right, programming is getting started right now. Let's head on over to DC, where we're going to hear from Bullish CEO Tom Farley. He's going to introduce the first session. Like I said, that's going to be with SEC Commissioner Hester Peirce. I'm Jen Sanasi, and I'll be back in about an hour to break it all down with journalist Eleanor Terrett.
I do want to talk for a minute. Like when we picked this date many moons ago, imagine what we were anticipating for the agenda versus what the agenda actually is. What an incredible summer for digital assets, the Genius Act, Clarity passing the House, bipartisan activity in lots of different areas, not to mention several prominent IPOs of digital assets companies on global public markets. Thank you very much. It really is incredible. And Tira said you have at most 4 minutes, and I asked her to get 6 because I just wanted to tell you that this was not a small ask for me personally to come and welcome all of you today. This is very personal. I grew up about 15 miles east of here in a working class town called Bowie, Maryland, in Prince George's County, for those of you who don't know, full of wonderful, wonderful people. And those included my parents and include my dad to this day. And he would go to the office every day, and I wouldn't see him till he came home at 8 at night. Sorry, I get choked up. He is a true hero. He's a war hero. He has multiple Purple Hearts, multiple Silver Stars, multiple Bronze Stars. He lost his leg for this country and then decided that's not enough. And he worked for the Department of Justice. He could have left for millions of dollars at any point and did not. And ultimately left public service only to open up the facility to work with kids missing arms and legs coming back from Iraq and Afghanistan at Walter Reed. And all the while, my mother was working for no pay or little pay, depending on that point in her career, at high schools in Prince George's County. And if any of you live in Prince George's County, you know how important that is. And so my view was that's who Washington was full of. And and I still have that view, incidentally. I am unbroken. And all of us came to digital assets in a different way. Mine happened to be a neighbor, 21-year-old kid walking across the lawn saying, I'm starting a blockchain company. And I said, I want to throw money in this sucker. And I put $10 million of New York Stock Exchange dough into pre-revenue Coinbase because my neighbor was walking across the lawn. It's better to be lucky than good. By the way, that's a lot of my career. It's better to be lucky than good. But I bought into this layer of programmable finance could change the world. Because I was the CEO of the friggin' New York Stock Exchange. I saw 400 IPOs. I ran the largest equities market in the world, largest options market in the world. And I will tell you from the inside, from the guts, it is the most inefficient market you could possibly imagine. And still the best in the world, don't get me wrong, but horribly inefficient. All of a sudden, boom, programmable finance. Now we can be more efficient, we can be more transparent, we can be more fair, we can democratize this whole sucker. Like this is awesome. I resigned, I retired from the New York Stock Exchange at a peak, and then I engaged in this digital asset space. And what happened? I came to Washington and I was lied to, I was stolen from. There was this weird cult that believed that this layer of programmable finance was somehow evil. And this is not a political comment. This is not a Republican versus Democratic comment. One of my best friends is Joe Crowley, if you guys know Joe Crowley, or Richie Torres, or even Senator Gillibrand, or people on the other side of the aisle who were helpful and who were constructive. But man, I started to think, was my dad, like he's the greatest guy I've ever met in my life. Are there not others like him? What the hell is going on here in Washington? So for me to get invited to show up here to welcome you to this event at this moment in time and introduce great people who show up every day and serve our country, I was pumped. A lot of work to be done. This is not declaring victory. The work starts here today with an amazing agenda put together by Tira and all of you. Thank you very much to our sponsors. 6 minutes later, I would like to introduce a perfect speaker for us, someone quite like my father, could have left for millions long ago, could have bowed to the pressure, could have been broken, but has stood for this important innovation. SEC Commissioner Hester Peirce, and before you applaud, and she will be moderated by Mark Janoff from Ondo Finance. Please give us a round of applause. Thank you.
Excellent. Well, thanks everyone for being here today. Thank you, Tom. That family backstory is probably not a good setup for me to talk about my father's dentistry practice, but we'll move on from that. Thanks, Commissioner, for being here today. It's really an honor and a privilege to be able to chat with you, and thanks for CoinDesk for setting this up and bringing all of these great folks together.
Well, thanks, Mark, and thanks to CoinDesk, and also thank you, Tom, for that kind introduction. I think I want to start with two disclaimers, so I'll start with my normal one, which is that my views are my own views as a commissioner, not necessarily those of the SEC or my fellow commissioners. But I think Tom's story illustrates why it drives me crazy when people describe what I do as public service, because the people he's talking about, that's public service. It's people who are willing to go and defend our country and come back changed for life, missing limbs, and other serious problems as a result. That's public service. And what I do is no comparison to that. So I think we can just thank those people for what they did. It's important. All right, on to the mundane world of crypto.
Yeah, so maybe we'll start with a personal note. I know it's been about 25 years since you first joined the SEC, I think, as a big law associate refugee. What led you to make that move in the first place, other than, I guess, the disdain for billable hours?
Well, no one loves billable hours, but actually I had never wanted to work for the government, but my colleagues at my law firm, many of them had worked at the SEC and spoke very highly of it. And I was doing a lot of securities work, and it became very evident that to really understand what securities was about, you needed to be inside the agency. And so that certainly proved to be true. I learned things from the inside that I couldn't have learned from outside.
And how has it evolved in the 25 years since you joined? How would you describe that?
Yeah, I mean, the agency, its fundamental mission is unchanged, but I think one challenge that we've faced with, I think, much more clarity in recent years is just what does it look like for a regulator to accommodate innovation? And that's something that was always a problem at the SEC. I saw it from when I started very early on. But I think when you have a whole industry coming basically from the outside and saying, we want to try to do things differently, and saying it very loudly, it's much more difficult for the SEC just to not pay attention to that. So I think that challenge has been really good for the agency, and I think it will be good for our long-term sustainability as a regulator.
Interesting. One thing I'm very interested in, as a GC at a corporation in the space, is kind of the tension between innovation and what is the existing market infrastructure. I think our capital markets clearly are the envy of the world in many ways. Obviously, I think everyone in this industry or in this room would agree that the blockchain tech is going to continue to spur a ton of innovation, and that can be very disruptive. So how do you balance promoting innovation with kind of retaining the features of the existing system that have made our capital markets so successful?
I'm not going to say that's not a little bit of a challenge. I think it is. We do have really excellent capital markets. That's why I wanted to be in the securities field. I mean, I think our country is unique in the fact that you don't have to have wealthy friends and family. You can come to the capital markets. You can get funded if you have a good idea. That's the core of what it is. And then it also is the possibility that you as an investor can invest in great companies even if you don't know the founders of those companies. That's a really powerful thing, and it's led to a lot of the economic prosperity in this country. So whatever we do has to not break that, and we need to try to make it better. And I think that's the explanation for why some of this is taking longer than some people would like. It would have been good if we had started this 10 years ago, right? But we're kind of starting this year, and I think that's why we're trying to be careful. It's figuring out how can you let people experiment with the idea of getting to commercial viability, but also do that in a way that doesn't just throw out all the rules that are there for some of them for a reason. Some of them, probably this experiment that we're engaging in now will show us we didn't need those rules for anything, and that we can get rid of them across the board. But I think that's what we're trying to figure out how to do.
So I think on that topic of experimentation, you've been a huge proponent of sandboxes, innovation exemptions, and those sorts of things. What makes a successful versus unsuccessful sandbox type program, and how do you decide when it's appropriate to go in that direction versus the direction of more permanent exemptive relief or rulemaking?
Yeah, a couple things. One is you can do a sandbox type experiment more quickly than you can write a rule. Rulemaking takes a long time. You've got to propose it, and that's good. You're getting public comment. You want to do that for something that's going to last, but you can run an experiment through a sandbox more quickly. And what makes it successful is that people want to actually participate. That's one thing. And then the goal really is not let's run a 3-month experiment or a year-long experiment, but it's how do we let people get to commercial viability? And I think that will be the test, is if people, and it's not our job as regulators to make markets like products and services, but it's our job to work with folks so that they can offer products and services that will be good for people. And so, and that will then lead to commercial viability. So I think that's really the true test, is whether we can do that. Now, you can do a sandbox through a no action letter, which is a tool that we've had, we use routinely. You can do it through exemptive orders, which Congress has given us the authority to do. And so we're looking at different options, and we do encourage people to come in and talk to us about what they're trying to do so that we can work with them and make sure that it's achieving our legal objectives that we have, but also enables you to get to commercial viability.
So you mentioned experimentation as being kind of a key component of striking the balance between innovation and sort of retaining the features of the successful capital markets. Does that always mean a sandbox, or are there other kinds of
No, I mean, I think you can have a rule that would allow people to experiment. I mean, people can experiment by graduating immediately into a rule set, and if it works, it works. If it doesn't, it doesn't. So I think the goal is longer term to have rules in place that will allow people to try things, along the lines of something that I suggested with my safe harbor now many years ago. I see Coy in the audience who worked with me on that. And when we were putting that together, the goal was really to allow people to experiment also, because many things that people try don't end up lasting long term. But that was designed to be a tailored set of disclosures and a tailored approach to making an offering.
Got it. So, also on, sort of a related topic, there's a lot of, obviously, exuberance in the industry these days. I think people are very excited about, the potential for clarity and change and, a bit of the whiplash effect from how things were a year or so ago and more. How do you set expectations with industry about, the pace, timeline, scope of change? So that people, can plan accordingly from a business perspective?
Well, I don't know that I've done a great job setting expectations so far, because I think some of the exuberance is a little bit unbounded by reality, frankly. And so I would like for people to know that these are difficult legal regulatory issues. We want to get this right. If we mess it up now, it is not going to be good when a new administration comes in that's hostile to crypto, because they'll see, look, it's just a bunch of people trying to build things that aren't useful and that are, they're trying to just skirt the laws. And so doing it right means coming in, talking to us, let us figure out what you're trying to do, make sure that you've talked to lawyers. And I hate to say this, but I mean, this is a highly regulated area, right? So figure out what the potential legal challenges are that you face and tell us what those are. But let's have a serious conversation where we're going to raise the securities laws and regulations and say, okay, do you think you can comply with this? If you can't, what's your alternative approach to achieving the objective behind this law or regulation? And sometimes those conversations, frankly, are not very serious when people come in, because they think, oh, well, Hester's in charge, so that means we can do whatever we want. And I am pretty much someone who thinks that if two people want to engage in a transaction and they're adults, they should be able to do that. But we live in a world of laws, and Congress wrote securities laws. And I think those securities laws are part of the reason why our capital markets have grown to be as successful as they are. And it's my job to administer those laws, and we can't just throw everything out. Now, that said, Congress gave us a lot of flexibility, and we want to use that flexibility to good end, but you guys need to help us do that. You need to help us by coming in armed with solid legal thinking, and you need to just pace yourself. I know the market is moving fast, and I know a lot of people are out there doing a lot of things, but you need to realize that if we do it right first, it's going to be much better than rushing out there with a bunch of stuff that people don't know what they're getting. They think they're getting X and they're buying Y. They think they have certain rights, and then 5 years from now or 2 years from now, it turns out that, no, actually, you have no rights. We need to make sure people know what they're getting into, because that is always going to be better for the person offering the product or service and then for the person buying the product and service. It's better to have everyone on the same page. The regulators should be on the same page too. So I know I'm a bit of a Debbie Downer this morning, but I think it is really important for us to work together in a way that's productive, in a way that is sustainable and will get us to the place that we all want to go.
Yeah, very much, the long-term vision. Do you worry at all that, coming out with statements and guidance, folks talk about how, if Trump administers by a lot of executive orders, those can just get unwound by the next administration. How much of your thinking is, okay, if we're coming out with supporting guidance change interpretations through statements, guidance, you worry that could get reversed or interpreted in a slightly different way, down the road versus if you come out with rulemaking? How much of that is?
Yeah, no, I absolutely worry about that. And I think what we're trying to do is, one, just out of the gate, we tried to put out some guidance because that's something that we could do. It's something that I had been saying we should have been doing for years. And it's important for people to know there are areas that the securities laws does not protect. Don't assume that if you're buying a meme coin that the big bad SEC is going to come in when your meme coin drops in value and rescue you. We're not going to do that because they're mostly not, those offerings mostly are not within our jurisdiction. So I think some of that stuff is good for us to lay out there. But the goal is to move to rulemaking, which will be more sustainable long-term. And obviously, Congress is busy working on legislation on market structure. They already got the stablecoin bill done, which is great. And now the market structure bill is a big undertaking. But I mean, that's how you get to more permanent and sustainable. But we can do a lot with the existing authorities that we have to write rules. And we're using those authorities. I think, we put out a statement, I think it was last week, that said, look, trading platforms that we regulate can already trade non-security crypto assets. There may be some things they have to work out, some things they have to think about there, but there's nothing in existing law that says this can't be done. And so I think these kinds of documents can help people sort of figure out where they need to spend their time and their energy. And so that will also help us to get to a better place. It's the roundtables too. I mean, roundtables are not an answer to all of the problems that we've seen, but they help us get to the right answers because as it turns out, a lot of this is really difficult. There may not be one right answer, and we want to make sure that we hear from as many people so we can get to the best answer.
Thank you. Just shifting gears a bit, you talk a lot, and I think in your request for feedback and the 40 some odd questions you released months back, that it must be some kind of way out
I
of
may
here.
have some more.
I heard there I heard there was going to be some entrance music for speakers today, so I was expecting that to be your entrance music.
It should have been, right? Yeah.
Maybe next time CoinDesk puts on an event. You asked about non-U.S. some other jurisdictions and their approaches and other jurisdictions that we can take cues from. Have you, in your view, in your opinion, what other non-U.S. jurisdictions have done things kind of the right way or in an interesting way and laid good groundwork for digital asset regulation?
It's helpful to watch what's happening in Europe. I wouldn't say that that's the solution that's right for us, but I think that the fact that they were able to get legislation done pretty quickly and then we can now see how that registration regime is playing out. I think Switzerland has done some things right. Singapore has obviously been accommodating experiments for a long time in this area, and I think that's been helpful. They have a more let's get in the sandbox with the participants kind of approach than I would prefer. But so I think there are a lot of places that have offered us something that we can look at. I mean, obviously, a lot of jurisdictions got out there much earlier on the exchange-traded product front, which was a helpful, as I was saying, why aren't we doing this? It was really helpful to see some of those products had been out there for a long time and were trading just fine. So I think we're always looking to learn, but welcome. That is a question that I have been asking at a lot of these. I haven't done a lot yet, but at the small firm roundtables that I'm doing. If people have suggestions of a jurisdiction that they think is better, then let us know what it is.
And is that what you look for, effectively folks doing something that maybe, we've been slow to adopt here and it actually, doesn't disrupt existing market infrastructure? Is that?
I mean, that can be helpful. I think it's also helpful just to see the different attitudes that regulators take. I do want the SEC in the U.S., though, to be the leader, right, in terms of, I think a lot of people are looking to see what we're doing, right? And we should be the place where people who want to build things can just come and build things with as little friction as possible. So my goal is always to make the U.S. the most friendly jurisdiction to people who are trying to build things.
Got it. So you talked a little bit about what folks can do right by coming in and engaging with the commission and the staff. Are there any tips about what to avoid when coming in to engage?
I mean, I think I've kind of said it, and I don't want to beat a dead horse here, but it really is come in armed with a legal basis for what you're trying to do, grounded in the legal precedent that you have. I guess another thing I would say is, and this is not a what you shouldn't do, but what you should do is watch what we're doing and know that it can be incremental. If you say, wait, why didn't the SEC take this one step further? Well, come tell us why we should take that one step further. We're very open to that. And we don't view this as like one and done. It's really a series of small steps that will get us to where we need to go. And then ultimately, my vision is for the crypto task force to disband. And then the SEC will be entertaining requests to do other things without the need for a crypto task force. So it's to get some of these steps down and establish a good pattern and then come in and talk to us. That's always been how we worked. We do things incrementally. People say, look, you did this, and now we want to do this +1, and here's why we think this +1 is fine. And then that's how we get there.
Do you find that folks ought to be coming in a bit more as, a unified industry voice or multilaterally versus one-on-one with the commission?
Well, I think both can be helpful. I mean, it would be great if the industry all came in and they said, this is exactly the solution you need to put in place. Just do it. When in reality, what we're getting is you need to do this, says one group, and you need to do this, says another, and you need to do this, says another. And we have to figure out, we have to choose one, right? And it's not going to make everyone happy. So I think if you're unhappy, then you should come in and you should tell us why you're unhappy. Or if you have something interesting that you're trying to do, it's probably not helpful for you to come in with a big group of other people who also have interesting things they're trying to do, because you probably need to either find 5 other people who are doing the same type of thing and say, hey, here's relief with a set of conditions that would work for all of us, or you need to come in on your own and say, here's some relief that would work for us. So I think it's a bit of a mix.
Got it. And how much of a challenge is that for you when folks are coming in with different permutations of, similar, approaches to a problem, and you're considering granting exemptive relief, but maybe granting it would give an advantage to one business over others? I
mean, that's something we do worry about, of course. This isn't intended to be the regulator picking the winners and losers. But the best thing you can do to put yourself at the front of the line is to have the best legal analysis, the most buttoned up legal analysis to say, this is why we think we can do what we want to do. So it is unfortunately the reality that in a highly regulated industry, a regulatory decision can give someone a head start.
And as we kind of get close to ending time here, I'm curious. I find that when I'm advising on product strategy, I'm often left kind of poring over legislative history or rulemaking history behind very arcane aspects of securities laws or regulations that folks maybe haven't thought about in a while, but are sort of triggered by the pressure that the blockchain-based innovation puts on things. And how do you all sort of stay abreast of those issues?
I think the same way you do. We're looking at the rules and the history and how did they arise. But I mean, this has been a fun project for that reason, because it has enabled me to think about a lot of issues that I haven't thought about in depth before. And it's kind of encouraging to see new technologies come in and say, hey, maybe there are rules that we don't need because we have these new technologies, or maybe this just catalyzes us to think we can do things differently across the board because this new group came in and made us look at things in a different way. So whether it's transfer agents or record-keeping rules or how we regulate trading platforms, those kinds of things, or disclosure, right? There are all kinds of things that new technologies can really help us to take a fresh, much-needed look at. And that's why I think this can be, even for people who are not that interested in crypto or blockchain, this can be a good moment for us to really come up with a better regulatory structure for the broader market.
Excellent. Well, thank you.
Thank you.
It's a pleasure being here.
Appreciate it. Thanks to all of you.
Good morning, all. I'm Dan Spooler from the Blockchain Association. We're the collective voice of the crypto ecosystem here in Washington, D.C. We represent over 130 different companies in this space. And today, it's a pleasure to see so many familiar faces in the room. And I'm here to introduce our next keynote, an individual who is tasked with the Herculean challenge of bridging the gap between traditional banking and digital assets. In his first industry event since taking the helm at the OCC, as comptroller of the currency, join me in welcoming to the stage Jonathan Gould, and this discussion will be moderated by Edward Woodford, founder and CEO of Zero Hash.
Interesting music to walk into. Excellent. Well, good morning, everyone. Great to see everyone, and thank you, Jonathan, for doing this as well. So we're going to try and cover a lot of ground here. 3 areas: crypto, stablecoins, and tokenization, each of which could fill the whole day. So we're going to try and get through that relatively quickly. I think maybe focusing on the crypto side, maybe just to give a preamble of the question. I think over the last few years, we've seen different ways of regulating by enforcement, regulating by rulemaking, such as SARB 121, and then there's been regulation by what we've termed implication, the softer, but I think equally as pernicious mechanisms of government to potentially rulemaking. So maybe on that element of debanking, which I think has been a great example. You've testified several times around debanking. I think there's still a debate. Did debanking even exist? What was it? And what's changed?
Well, so first, thank you very much for having me here today. It's great to be here, and really appreciate getting the chance to see some old friends last night at the dinner. I will never forget walking into Bitcoin Miami back in April 2022. Bitcoin prices, I think, were like 42,000 around that time, and I was the general counsel of a company called Bitfury, and I just really appreciate the warm welcome that I received down there, just meeting everybody. It was just such a welcoming environment, so I really appreciate it. So so debanking. So debanking is real, okay? It has occurred in the past to any number of lawful business activities. We can trace it back to the original kind of so-called Operation Choke Point from several administrations ago. It's occurred not just to crypto individuals on a personal level as well as a corporate level. It's applied to other lawful business activities over time. So it is a real phenomenon. As recently as last week, I was hearing stories of individuals or corporate accounts that were being basically given kind of the Heisman. No, thank you. Like, we don't want your business here. So that's an issue. As you noted, I have testified on this a couple years ago to Congress, so I won't kind of belabor the points I made there. I think they're all accurate, and I certainly stand by them. We at the OCC are now trying to make a change in that. Just a couple days ago, we announced some, I think, pretty significant clarifications and changes to our existing policies, which we hope will. This is in the licensing and the Community Reinvestment Act space, which we think will provide a forum for folks who have been debanked to raise it with us, and it provides a mechanism to, I think, apply some leverage to banks. And of course, we also announced that we will be investigating some of the largest banks to see what has been their pattern or practice, obviously consistent with the president's EO. So we're working on that as well. And we are also looking at our own actions, of course, over the last years to make sure that we are not continuing to cause issues or putting pressure inappropriately on banks, whether under the guise or pretext of reputation risk or BSA/AML compliance risk or whatever have you. So that's something that we're very much focused on, and I'm sure be more to come on that. And it's another reason why I'm very excited to get into, hopefully under the Maine Treasury's leadership taking a hard look at kind of BSA AML compliance issues and see what we can do about that. So again, this is a real issue that we are certainly focused on. And I would just note that one thing that we have done since I got there to the OCC, which has only been about 8 weeks as of yesterday, is what we did is we embarked on a review of every single, what I would describe as, and what were in fact, anti-crypto licensing conditions that we imposed. And we have lifted all of those anti-crypto licensing conditions. So that has happened over the course of the last 8 weeks already. I know there's probably more work to be done, and we're working on it, so bear with us. But we were working with certain third parties, sifting through our own complaint data, making sure that there aren't continued instances of this, and if there are, they're getting attention. So we appreciate you working with us on this.
So as we enter day 57 of your tenure, and we look towards some of those points that you've made, obviously, I think May 7th, the OCC issued the interpretive letter 1184 in terms of banks entering the crypto space, and we've certainly seen a stepped function in terms of banks accelerating their plans around crypto. What do you see as any potential barriers still remain in terms of banks providing a crypto service to their end customers? So, for example, a bank that has either a trading application or a wealth management arm of their business, they see the customer demand. Is it security, oversight tools, cyber resilience? What are the nuances that still have to be there before customers can access crypto through their banks?
Right, so a couple things, starting at a high level. I think, we, the federal banking agencies, and obviously more specifically the OCC, since I'm charged with that one, we need to have a different attitude around interacting and learning from those banks or those folks who want to engage in these activities. What that means is that we have historically, or at least have over the last few years, pursued more of a risk elimination strategy where we wanted to kind of prevent the banks from getting involved in this at all. I take a different view, both of the business of banking and what is financial intermediation. So to me, I view a lot of what crypto represents, as well as the technology and processes underlying it, as being inherent to financial intermediation services. So if people want to come into the banking system and they can meet our statutory factors, great. If banks currently in the system want to engage in these activities, great. We need to make sure they do it in a safe and sound manner. But the attitude has changed, right? Or I hope to ensure that the attitude has changed, which means that rather than saying that, look, it's too hard, we can't figure out ways in which we're going to permit this stuff to be done in a safe and sound manner, we're going to take a step back at the OCC. We're going to work much more closely with those who are interested in doing these activities, and we're going to chart a path to ensure you can do it in a safe and sound manner, right? So these are legally permissible activities, and so it is incumbent upon us as regulators not to throw up our hands and say, oh, this is too hard, or there are all these imagined or real novel risks associated with it, but rather we're going to chart a path together to do it in a safe and sound manner, because that is our obligation as supervisors and regulators when you're engaged in legally permissible activities. So high level, so more narrowly or more specific, I mean, obviously when a bank wants to engage in a new activity, they've got to make sure they have kind of the infrastructure necessary to support it. One of the things that I am concerned about is that, as we've seen in other areas that involve, say, new technologies or new products and services, that there can sometimes be a scenario in which we have a bit of a two-tier system. And I would liken that to what we saw with things like certain derivatives products, where you create a scenario, or regulators might accidentally or intentionally create a scenario in which only the very largest players can engage in the activity. Because only the very largest, this is how the logic goes, only the very largest players have the massive balance sheet capacity or the sophistication of risk management to engage into it. So you create this two-tier system, right, where yes, these are legally permissible activities, but only kind of the mega banks can do it. So I think that's, I understand that perspective, but I think that's a problem in the sense that I want to make sure that for those banks that want to engage in some of these activities, that all of them can do it, notwithstanding their size. From the smallest of community banks, as long as they understand the risks and are managing the risks, to the largest of the mega banks, right? So I don't want to create this two-tier system where only certain, privileged members of the banking system can engage in the activity, but others can't. And that has happened in the past in certain areas. And so, I think it's really important that we kind of work with, the industry who knows it best, and we learn from you all to figure out a path forward again, so that we can do these things in a safe and sound manner in ways that are accessible to all banks if they are interested in doing it. There are obviously interesting aspects, of crypto activities, including, for example, irreversibility of transactions, which is something that in some cases is new for banks in dealing, and that banks are going to have to think about the implications of that. But we're here to work with them to figure out the implications, not to say this is too hard to do. There's no way you can do this in a safe and sound manner, and therefore just can't do it. So we have a different attitude, and so making sure that that attitude is kind of conveyed and starts actually percolating out to all of our examiners and all the other folks within the agency who are working on it. I think that's one of the things we really need to focus on.
Excellent. So a pillar of effectively an equal playing field for all. And I think what's also refreshing is kind of not viewing the world in a zero sum, right? You can be innovative, but also not lose safety and soundness, right? And it's creating those rules around that so that you're not, innovation doesn't mean losing some of the principles.
Yeah, and I mean, to point you're raising there, I mean, I don't view. Obviously, we want to be and should be technology agnostic in our regulations and supervision, recognizing that there could be certain risks presented with new technologies that need to be specifically addressed. But I don't see innovation as inconsistent with safety and soundness on its face. In fact, I think one of the challenges that we may have in various parts of the banking system is that, or has been, a failure to recognize larger changes in markets, consumer demand, and technologies, and the failure to innovate is itself a potential risk to the banking system, individual banks. I mean, one of the things I've been worried about for a long time now is what seems to be perhaps a trend in the possibility of decreasing relevance of the banking system as a primary source of financial intermediation in U.S. markets. We've obviously always had a large presence of non-banks, capital markets funded activities, which is terrific and a sign of the dynamism of our system. But it's my job to ensure that the national banking system remains relevant over time, because I think it has been one of the crown jewels of the American financial services system.
Thank you.
Innovation is key to it remaining that way. And the OCC has long been had the role of interpreting kind of the evolving nature of banking over time.
Excellent. So maybe switching gears a little bit to stable coins. I know that we were talking earlier about the OCC now has an X account. And if you look at X today, the topic du jour is, for example, hyperliquid stablecoin USDH. And we obviously now live in a post-Genius world. Now that the Genius has passed, what are the key priorities, timelines that you can share with regards to the implementation of Genius?
Right. So thank you. First off, obviously the OCC, I think in general, and I certainly specifically, am really excited about the Genius Act's passage. I was actually had the privilege of attending the signing ceremony, which was really a lot of fun. I had never been to a signing ceremony before, so it was terrific. The Genius Act actually, as you know, it expands the OCC's remit with respect to federal payment stablecoin issuers and foreign issuers, and charges us with within 1 year, so July 2026, we've got to produce our regulations on that, and we will very much need input from the public, from you all. One of the things that I'm so excited about on the Genius Act is that it actually kind of harkens back to the early history of the OCC and the comptroller of the currency, and the original kind of vision of then President Lincoln and his Treasury Secretary, Salmon Chase, which was, of course, the OCC was there to, in part, ensure that the notes that various banks were issuing were of consistent value. And of course, there's some resonance there under the Genius Act with us being responsible for designing, at least for a subset of stablecoin issuers, a reserve framework, consistent obviously with the statutory factors that Congress has given us, that likewise ensures the consistency of value of stablecoins, regardless of the issuer. So very excited about that. We've had working groups, I think even before the law was actually enacted, kind of thinking about this and so forth. So it's going to be a big process, a really big undertaking. I think that we have obviously the public comment process is going to be critical. I think that we have the resources we need to develop the framework. We're going to be working extremely closely with Maine Treasury, obviously, to deal with kind of key aspects of the law. We're sensitive to concerns that some have raised about deposit flight from the banking system. I think there's some of that anxiety is perhaps overstated. I would note that there are a number of deposit-taking type entities, non-bank entities out there, including, for example, money market mutual funds, entities, frankly, like PayPal. This has not, I think, over time caused a rapid or material departure of deposits from the banking system. That's point number one. Point number two is we will be designing a regulatory and supervisory framework to address that specifically. Point number three, obviously my job is to ensure the safety and soundness of the federal banking system. If it looks like deposits are dramatically fleeing the federal banking system, that would be a source of concern at the OCC, and I'm sure across other federal banking agencies too. And we would have, I think, in large measure, control over whether or not that actually happened. And the fourth point I would make is just that I think it would, if there were going to be any material impact to deposits as a result of stablecoin issuance, I don't think that would happen overnight. Meaning I think we would see it over time, and hopefully our elected officials, or at a minimum, obviously the federal banking agencies, would certainly have views on that and would be monitoring it very closely. It would take steps to address it if indeed, that kind of worst case scenario did materialize. But again, I'm optimistic. I see stablecoins and the ability of banks and non-banks to issue stablecoins as a positive. Again, it's not going to be appropriate for all banks to get into it. It may not make sense for the business model, but I think even some of the smallest banks could benefit from considering whether stablecoins is something they want to get into. It could be a way to increase their service to their existing customers. It could be a way to increase exposure to potential customers to bring them into the fold and then cross-sell other services. So I think what we're really focused on at the OCC is emphasizing the positive here and the opportunities for both banks and non-banks alike in this space, while obviously being very mindful and guarding against any potential kind of downside risks.
Excellent. So fascinating to hear kind of the value propositions that you see around stablecoins. I know that you can't comment on specific applications, but that there's reports of hundreds of different fintechs and applications, and some are public. With regards to Genius and the OCC, what's the role that it will play around issuing charters and licensing to stablecoin issuers? I know it'd be great to get some more context there.
Yeah, sure. So we are responsible for licensing a subset of stablecoin issuers. These are the federal payments stablecoin issuers, certain large state issuers, and foreign issuers. Yep. And so reflecting that kind of role, as well as just generally the important role to the OCC and to the federal banking system as a whole of our chartering function. Just yesterday, I elevated that function within the OCC. The OCC front page of its website says we charter, we regulate, and we supervise, right? So that chartering function is one of our most strategically important functions because we're the gatekeeper to the federal banking system. And so the person who leads that and who's ably led it for many years is now reporting directly to me, which gives me kind of greater visibility into what's going on in that area, and ensures that when we make decisions on the licensing side, whether it's for bank charters or for, in the future, stablecoin issuers, we were doing it intentionally at the senior-most level of the agency, because we recognize, and I certainly recognize, the responsibility of being a good steward of the federal banking system as a whole, and acknowledge that licensing function does play a very important gatekeeper role. But we're very excited. I think many of us at the agency are very excited about, again, that new remit of authority, and so we'll be obviously applying these standards, whether the statutory factors set in the Genius Act for stablecoin issuers or for national banks, the statutory factors set in the National Bank Act for those who are interested in getting a charter from us or getting a license.
Excellent. So maybe taking one last turn around tokenization, big topic, and obviously, it's been interesting to see different governmental agencies putting, for example, data on chain. Maybe just talking about tokenization and what it means. I think maybe just to set the scene a little bit, the way that Genius is effectively written is stable coins are effectively non-yield bearing, and other elements can be yield bearing. Specifically, for example, tokenized deposits or tokenized treasuries. What role do you see for those tokenized assets in the banking system? What is the value proposition? Why is it interesting? And how do you think about that space?
Right. So I view, and thus the OCC views, tokenization is definitely an interesting process. We recognize it could have useful application for both assets and liabilities. Some of its use cases potentially are, reducing kind of friction costs, reducing kind of intraday credit risk, increasing liquidity. The ability to build in kind of smart contract features into assets or liabilities that are tokenized. There are obviously risks associated with that. If you talk about, for example, tokenized deposits, you got to deal with things around just the protection of personally identifiable information. You want to make sure that security is good, make sure people are confident in their ability if that's the way. But I think there are a lot of opportunities there. You think about just for custody too, and tokenization of assets in custody. It could facilitate, for example, collateral usage in swaps activities. So I think there are a lot of applications here, and my sense is that there are a number of banks that have been for a while now investigating how they can again reduce certain inefficiencies, which ultimately benefit the customer and the financial services system. So we've got a lot of work to do just from a learning perspective, I think, at the OCC, but we're eager to engage with you all and certainly work with the banks that are interested in tokenizing assets. And again, I think I read a statistic the other day. It's something like 7 billion of assets already, like money funds, are tokenized. We've seen it in repos and private funds. So I don't think this is going away. We recognize this is a real trend, and it's our job to get up to speed on it and make sure that we are ensuring that can be done in a safe and sound manner.
Yeah, and I think that guidance will help us move from what has frankly been experimentation or innovation arms of banks into something I think really tangible and unlocking a huge amount of value. Maybe final question. What would you encourage industry participants to do when engaging with the OCC, or anything that you would like to ask from industry?
Yeah, no. So here I'll echo Hester, who's obviously done a terrific job leading in so many of these areas for so long now. Please engage with us early and often. We really need your help. We have not in all cases taken advantage of the opportunities we had over the last few years to learn. But I do believe that there are a number of people at the OCC who really are engaged and do know quite a bit about all the different aspects of both the technology to the specific asset classes that are developing. But we really need help. And so we welcome your input and need it. So please don't be shy about engaging with us early and often.
That's it. Well, thank you, Jonathan, and your team's efforts.
Thank you very much.
Thank you.
Stand of Crypto is the largest pro-crypto organization representing crypto voters and users here on Capitol Hill. We have over 2.3 million members that activate to advocate for pro-crypto candidates and pro-crypto legislation. We helped register over 600,000 crypto voters last year, and we are proud supporters of the next panel, who have two of the greatest crypto champions in Congress, Representative Torres and Whip Emmer, and it'll be moderated by Daniel McCabe of Flexa. So if you would please give a warm round of applause for this next panel.
Yeah.
It's a long way away, though.
I'm to your left.
Yeah, well, there we go.
I'll just look across.
Unless somebody's behind us. Yeah.
Well, let me
Sorry,
kick
we're
this
having a
off.
little fun. Good morning.
Fun is good. This will be a fun panel. That's kind of how I like it, actually. After the years of maybe not so much fun, it's time to have some fun, I think. So first, thanks CoinDesk for putting this on. This is amazing. But most importantly, thank you two, I think titans of regulation right now. And I think it's safe to say, without Majority Whip Emmer, without Representative Torres, I don't even know if there is genius or clarity. I don't even think we're here yet. So thank you both before we even get started.
I've never had anyone attribute clarity or genius to me.
Let's kick it off with, I want to talk a little bit about innovation. That word keeps coming up, innovation, protecting innovation. And at Flexa, we were founded in 2018. So when we were founded, this is a time, this is no secret, this is a time when I would say there's bipartisan opposition to what we were doing with digital assets, trying to build a new payment rail so merchants can accept digital assets. Any wallet, any app, like any asset coming through, merchants should be able to accept it, consumers should be able to spend it, replacing analog rails that were built some 30 years before the internet. Very challenging stuff. I mean, that's an innovative thing, and a lot of companies in the space were doing similar things then, facing, again, not just opposition, but sometimes antagonism. So here we are today, and thanks to both of you, we do have Genius Pass, and we have Clarity coming. Can you first let us know what's different today for companies trying to innovate compared to what Flexa and some of the other companies from 2018 and earlier went through? What's different today for those companies trying to innovate?
What's different today?
Today, how do they innovate today?
You have a pro digital asset administration, and then you have champions like Richie Torres and others. I mean, I've been doing this for over a decade now. And I really don't fit the profile for doing it over a decade. It's been amazing to me.
I've only been around for a decade.
What's that? You're on fire this morning. I kind of like it. Keep it up. But it literally was. I used to go to these meetings years ago. I don't know what you were doing then, Richie, but you weren't in Congress, and it was like Jared Pullis and Mick Mulvaney. Yeah. And it's like the biggest odd couple I'd ever seen, and talking about things that most people didn't understand in Congress. And boy, have we come a long way. That's why I consider Richie actually a friend. He doesn't know that, but I do. I'm saying it this morning, but I do, because we know this is, most things in Congress really are not partisan. They don't have to be. And this one, we've made an effort to make sure it doesn't get that way. So I think any credit, you got to give the Senate a ton of credit for genius. Bill Hagerty, the Republicans and Democrats that moved that thing out, I mean, especially for a calcified banking committee that I don't think had marked anything up since like 2019, to move that and get it across is great. Now it's about finishing the job. I think if people like myself and Richie can take any credit, is that we have managed to keep this an American issue, trying not to get the committee that we both serve on to split into their respective jerseys. We're all wearing one jersey trying to find out the best idea in order to move these things. Clarity was that. We now need that regulatory certainty, which is clarity, and our friends over in the Senate are literally going through that, and they're making their own proposals. And the sooner we get that done, in light of the fact that we have genius, the better. But I think it's a totally different world since, well, over the last 10 years, and especially over the last 8, because the original Trump administration was not necessarily friendly to us. The last administration was definitely not friendly to us, and now there's a whole new regime of people that I think run the political spectrum, that understand how important these digital assets and the innovation that comes with it are to the United States.
Look, for me, the starting point is the recognition that innovation is a net good for humanity. Like, it's the greatest catalyst for economic growth, for progress in the history of humankind. There's nothing like it. And it need not be partisan. Like, the internet is not Democrat or Republican, right, or conservative or progressive. Like, our best technologies should transcend partisan politics. And in America, we have a wealth of human ingenuity, but ingenuity can only take you so far. It's a necessary but insufficient condition for progress, right? A lack of regulatory clarity can have a chilling effect on innovation in a country like the United States. And for far too long, we had a policy of regulation by enforcement. And I often analogize regulation by enforcement to a traffic agent who's excessively ticketing drivers without telling the drivers the speeding limit. And I feel like the government has an obligation to tell you the speeding limit before ticketing you for speeding, to tell you the rules of the road. And the lack of regulatory clarity was often compounded by mixed messaging. The CFTC would tell us that Ether is a commodity, but then the SEC would tell us that it's a security. And then the SEC said, well, maybe it is a security, or maybe it's not a security, or it all depends. And if regulation becomes nothing more than an Etch-a-Sketch, you cannot function as an entrepreneur in the United States, right? So the fear of liability, the lack of regulatory clarity had a chilling effect on innovation in the crypto industry.
Yeah, well said. I can appreciate that. It's curious to me, too, how early you were both in this. I've talked to...
By the way, I'm nothing against Etch-a-Sketch. I just feel like our SEC regulatory regime should be more stable than an Etch-a-Sketch.
Understood.
I think you were being kind.
Yeah, right. You both got into this so early. I have a story I shared with Whip Emmer yesterday that when Flexa founded in 2018, we were just trying to build. We were just working. And out of nowhere, I got a call, and I thought it was fake. And it was from your office, Lizzie at your office, reaching out to us in a WeWork in Manhattan. Somehow found us. I want to meet. I want to talk to you. I want to make sure you're getting what you need. What can we do to help? And that was 2019, well before there's a word genius floating around, or even stablecoin legislation. And then Representative Torres' office, the first time we asked to meet with you, we meet with you. Not staffers, we're in your office with you, and you're taking notes. One of the first people to take notes while we talked and challenge it and ask questions. That was early too. So what prompted both of you to get involved so early, and what prompted your interest in this space to begin with?
I feel I saw in crypto and blockchain the democratization of the internet and finance. Like crypto has the potential, has the power to radically decentralize the financial system and create a better, cheaper, and faster payment system for communities like the ones I represent in the Bronx. And I'll just tell you a little bit about my district. I represent the poorest congressional district in America, communities that historically have been left behind by legacy financial institutions. So 20% of the Bronx is unbanked, 30% is underbanked. And the New York City Department of Consumer Affairs did a study and found that communities like mine in New York City spend more than $200 million a year on check cashing fees.
Yeah.
Simply to transfer their own money to loved ones abroad through remittances. And so a technology like stablecoin can digitize, tokenize the dollar. Blockchain enables real-time transactions. And the combination of those two technologies, the ability to move a dollar at the speed of the blockchain, has the power to create a better and cheaper and faster payment system that liberates the lowest income from the long delays and high fees of the traditional financial system. So the ability of crypto to radically decentralize both the internet and finance, that's what drew me in. And crypto is something of a Rorschach test on which you can project your own ideological preferences. But for me, there's something profoundly progressive about the decentralizing power of crypto.
It's really interesting. First off, I don't know if you know how I first found out about Richie Torres. Lizzie, who Danny has just referred to, her work for me for quite a while. Lizzie, she would, I would either write them, or you have talented kids who write op-eds and then they give them to you and you mark them up and it's like, this is what I want to do. She gave me one that I thought she had written in my voice that she wanted me to mark up, and I read the darn thing. I said, this thing is awesome. I don't even have to change anything in this thing. And she said, well, it's not yours. A guy named Richie Torres from New York wrote this, and it was published wherever. That was my first exposure. And listening to Richie, we get here different ways, but as you know from our meeting yesterday, after listening to that, we're in it for the same reason. It's really interesting. I had a young staffer give me the book Age of Cryptocurrency 11 years ago, whatever it was when I first came into Congress. I read it, and it's like this appealed to the political leanings that I had starting in the 80s. And what is that? That's about putting an individual back in charge of their own decision making. So all the other stuff is what we've learned and tried to work on since, but for me it was empowering people. And that's not about your politics. And I was telling Danny yesterday that I see a day coming, and this is the facilitator, where it doesn't matter what your ideology is. It doesn't matter about race, religion, any of that. You literally are going to be able to exist in your community, and our communities don't have to have the tension that we feel right now because they can do business with others that are not similarly aligned but have a similar goal, whatever they're looking to get. I just think this is it's an amazing technology that's actually going to have some major social consequences. Then that Genius Act did two things for me. I have people tell me, well, it's not going to be used domestically. Yeah, and the internet wasn't going to grow, and digital assets, that's just funny money. That's not going to go anywhere. It is going to be used domestically, but more importantly for me, it's what you were talking about. We are exporting the US dollar all around the globe. Yes, that's important from a reserve currency status. Yeah, it matters, but for those of us, I think, that started in this a decade ago and have watched it continue to grow, think about that young woman in Africa that doesn't have access right now to the financial system. She can get access to the financial system. I mean, it is about giving people opportunities to access some of the greatest financial markets ever that they don't have access to right now.
Yeah. It's the greatest success story of financial inclusion that has not been told.
Yeah, that's great. That's actually totally where I was going next, is this topic of inclusion. I met with you both independently before, multiple times before, and you've both mentioned this word, inclusion, every time. And I'm so curious as to how that came again into your mind to begin with. At Flexa, that was one of our founding principles, as you both know. Like, one of the things we were doing was trying to build a payment rail for everybody to use, not prohibited by credit scores or not having a bank account or not being able to participate in commerce at all. And we did that. We created the world's first collateral token called AMP. We did that by making sure everybody can access, fully compliant, by the way, FinCEN registered, all the KYC requirements done. And people can now pay with collateralized payments thanks to AMP on a new digital rail everywhere in the United States, and everybody can participate. And when I told that story to you each, you both had the same thought, which is this word inclusion. So let's talk about that a little more. You referenced it briefly, but what did inclusion mean for you? How do you think this technology can help folks?
Look, first, one of the false narratives about crypto is that it would pose an existential threat to the dollar. And we've seen the exact opposite, right? The fact that most stablecoin issuers have pegged their stablecoins to the dollar reinforces rather than undermines the supremacy of the US dollar. But I see stablecoin as the greatest experiment in financial inclusion humanity's ever undertaken. Because if you are in the global south, and if you have no access to a stable currency, if you have a government that steals from its own people, if you're in a place like Venezuela, which at one point had 54 million% inflation over the course of 3 years, you now have access to a stable currency in the form of a tokenized dollar, in the form of stablecoin. You have something that approximates a bank account in the form of a digital wallet. You have a level of financial empowerment that would have been unthinkable for most of human history. And there are hundreds of millions of people who finally have access to a stable currency for the first time, and that story is largely untold.
And there isn't much I can add to that. You don't have to appreciate my sense of humor, but you said inclusion. No, I'm a Republican.
You're coming out in favor of DEI now?
Yeah. No, I thought well, no, I'm not going to get into that because I think some of these word games that we play politically are so ridiculous. This is the issue. Richie hit it square on. It is about making sure that people who have not had access because of where they are and who they are, it's because of people that live in places where the monetary policy has been so mismanaged, it makes it almost impossible to survive. I mean, I think I heard it first from Howard Lutnick, our Commerce Secretary, who said, just think about that cab driver in Brazil. He would love to do business in US dollars, but he can't. with a dollar-backed stablecoin, he can now do that. And I mean, the list goes on and on. So it is about making sure that everybody has access and that they can deal in a stable currency.
Yeah, absolutely. So what comes next? I know we're.
That's why when people, I hear the same false narrative, but crypto has no use cases. And I'm like, what planet are you living on?
Right.
Yeah, yeah. Well,
Isn't that the truth?
Yeah, like
Yeah.
Like tokenization is gaining momentum in finance. You have stable coin. Like if extending access to a stable currency to hundreds of millions of people is not a use case,
Yeah.
then I'm not sure what would be.
Yeah, absolutely. Yeah. Yeah, we've read, believe me, at Flexa we've seen articles about you can't use it for anything, you can't spend it anywhere. Meanwhile, we've been powering stablecoin payments since 2019, and we read these articles and reach out to the reporters everywhere. Still, by the way, this happens, and they don't take the call.
And speaking of conclusion, you know, harnessing the power of blockchain to radically reduce processing fees for small businesses, eradicate fraud from payment processing. Again, that would be a game changer for every small business in America.
Absolutely, yeah. We're trying to.
And it's possible in a world of blockchain technology.
Yeah, yeah.
Well, it's happening. It's happening right now.
Great. Now, what comes next? Because we've got some work to do on clarity, and then hopefully.
Death and taxes.
Yeah.
What's that?
No, death and taxes.
Well, taxes is part of this. There does need to be tax reform. I mean, especially so again.
No, that's true.
Yeah, there's especially the de minimis piece for how assets are purchased, and even how they're spent.
Yeah.
Right. If somebody's buying a cup of coffee, you know, should that be a taxable event? I know there's a lot of, you know, there's discussion now and some drafts being floated, that being addressed. But what do you see in that regard?
Clarity. To me, the next step is clarity, or a version of clarity. However, the Senate ends up improving, if they can, what the House has been working on for several years. I mean, what we sent over, and I recognize that the Senate doesn't have the same institutional memory because they're kind of just recently to this game. You got some champions over there, Republicans, Democrats alike, that have been there for a while, but it just has taken more time for them to like make it into the mainstream. So they weren't ready for clarity. They weren't ready just to accept the work that people like myself and Richie and our entire committee under Patrick McHenry and now under French Hill, and frankly, this is all well, we shouldn't say that. There are deniers on both sides of the aisle still, but they are coming. They're recognizing that this is real and it's not going away. So I think the next thing is regulatory certainty. We've got to make sure that we have jurisdictional clarity. This is something that we've been complaining about. Richie opened with this when he talked about regulation by enforcement. Oh yeah, my door is open. Come and tell me what your project is, and then I'm going to bring an action against you. It wasn't working. Now, I think putting together a David Sachs and the community, which you don't have to agree with everybody that's involved. We're supposed to have our disagreements. But the most amazing thing that I'm watching internally is what's happening behind the scenes. I mean, the negotiations that are taking place, and I know, Richie, you're right at the center of this, not only on the House side, but over on the Senate side, as they try to get to some conclusion when it comes to regulatory certainty, whether it's our Clarity Act or it's a version of Clarity that's been modified somewhat. That is the next thing. You bring up the tax issue, yes. The banking issues are important, how you are able to include that on your balance sheet, et cetera. Those are things that we're going to have to take care of as we go along. But I think the big one, and I don't know if you agree with me, I think the big one is some regulatory certainty through something like Clarity or something that is Clarity Plus.
Clarity is the holy grail. I think without the regulatory clarity that can only come from clarity, you're going to see there's going to be a ceiling on the growth of the industry.
Yeah, yeah.
Well, you kind of have to have clarity in order for the stablecoin legislation to operate the way.
Question.
Yeah.
Yeah. Well, we are I could talk to you both, continue this for another hour. This has been wonderful. Thank you so much again.
Of course.
Again next year, and it's not a 2-year wait, and you'll both come back. Thank you so much.
Thank you, Danny. Thanks, Richie.
Hey everyone, if you are just joining us now, CoinDesk is coming to you live from Washington, D.C., where our policy and regulation event is bringing together the public and private sectors for critical conversations around digital assets. We're going to get to the next session in about 15 minutes, but first, let's welcome our next guest, journalist and host of Crypto in America, Eleanor Terrett. Hey, Eleanor.
Hey Jen, how's it going?
Not bad, not bad. We are just getting into the swing of things with CoinDesk's crypto and regulation event. But I want to start here with you, Eleanor. You've been covering this space for a really, really long time. Just last year, I believe it was, SEC Commissioner Hester Peirce told me not enough people in DC care about crypto. And oh my, how that has changed. I just want to start by getting your perspective on kind of the evolution of this industry and I guess like how you've moved through it, covering it.
Yeah, absolutely. I mean, that just seems like just the understatement of the century, right? And
Mm-hmm.
we obviously had Hester Peirce kick off your policy and regulation event today. I had to laugh because, she's always she's so funny, right? And she's always very stoic when she gives her presentations, but she has just this like underlying humor and she makes me laugh every time I hear her speak. She just gets these like funny one-liners in there. And today she said, something along the lines of, I still get people coming into the SEC and they still think that they can, come in and do whatever they want because, I'm here at the SEC and I'm still
Yeah.
leading. Like, she's this friendly sort of crypto mom-esque type person, but, she's like, this is still a heavily regulated industry, people. This is still, the SEC. We are going to enforce the rules. So, you got to play along here. But anyway, to your point, a couple years ago, people really weren't thinking about crypto. Now it seems to be all that people talk about. Although you and I are deeply heavily in this space, I probably spend about 80% of my time on crypto Twitter, maybe even more, which is probably a crime. But anyway, so it probably feels a little bit more like, it is an everyday thing for me and you. But
Sometimes I feel like we probably need to get a life.
I know exactly. I think the same thing multiple times a day. But I think in terms of, where we are now in the industry, I think with Genius Act passing in July, that really was sort of the first milestone, right? I mean, that kind of got us over the hump of like, okay, can we do this? We've been talking about getting crypto legislation set in stone for so long. We saw the efforts with Fit 21 with last Congress. That was sort of like, okay, there's momentum here. I think, we'll probably be able to get something done with this Congress. And then, Genius passed and it was like, okay, that's milestone one, mile marker one. And now I think with market structure on the horizon, we'll see what we can do next. I think the Senate Dems obviously put out their own framework this week. That was a big, I would say, step in the right direction, I think, for, the last couple of weeks or so. It really has been a Republican-led effort on that side. I think we've seen the GOP lead most of the efforts when it's come to crypto. I think maybe just their voices have been a little bit louder. You've got the people like, we just saw Tom Emmer. He's been a leading voice in the House, obviously. But when it comes to the Senate, we've got people like Tim Scott, Cynthia Lummis, Bill Haggerty, I'm sorry, and Bernie Moreno. They are forceful personalities. When we watch them on the, on your live streams, when we watch them do their, the markups and the hearings, they're very personable, very forceful personalities, and it's like, okay, they really want to get something done. The Dems have been a little bit more, cautious to come to the table. But when we saw that the market structure draft released yesterday, some of those principles were very similar in line with what we saw with what the Republicans have been saying. So the reaction there was like, okay, maybe they're coming to the center now. We can actually, there's hope that we can get something done here. I want to know what you think, because I think, there's obviously still the standouts there that the Republicans are going to quibble over, the ethics clauses, right? Trump crypto corruption is obviously a big one. I think that's going to have to be hashed out. And the one about, kind of cracking down and policing DeFi a lot more. I think, there's still the stipulation whether, DeFi platforms will have to register with FinCEN as a bank. Obviously, the DeFi Education Fund will have something to say about that. Hasn't been, that's getting software protections for DeFi developers has been a big, effort that is obviously in the GOP's, I can't speak today, in the GOP's discussion draft. But, it's just been really interesting to see sort of like the steps that have been taken, and, where we are today is just an incredible, it just shows how far we've come from the last year. So all that to say, your first question to me was, a year ago people weren't talking about crypto. They really are today, but just the way in which we've come, I'd say in the last, even 6 months has been incredible to see.
I want to start by just reflecting on Commissioner Peirce's panel there at the beginning. She gives big mom energy, right? I feel
Oh,
like
totally.
when she talks, the industry listens. A standout quote for me, which I think we posted on CoinDesk socials by now, was, the big bad SEC is not going to come and save you if you've invested in a meme coin and it goes down in value. I just think like she does such a good job at highlighting the areas of the space that still need to develop, that are still so early, and then looking at the more mature areas of the space that have progressed and that we're looking at when it comes to regulation. It reminds me of that statement she put out on tokenized securities. It was just like very to the point, and the industry was like, okay, got it. Tokenized securities, probably still securities. And so I always just love listening to her speak. I think she gives so much clarity to the industry, and it's just refreshing to have her kind of leading the charge from a regulatory perspective.
I agree. And
I
you
wanted
see out with the SEC too, right? You're kind of feeling that Project Crypto vibe filter into what we're actually seeing put into practice, right? I think a big headline this week was also the NASDAQ has put in an application for tokenizing stocks and listing them on the blockchains. That was a big part of what Paul Atkins announced in his speech a couple of weeks ago now with Project Crypto, is really bringing the markets on chain. And that's a big idea to float. Obviously, it sounds great for people in the crypto and the DeFi community who have been asking for this for a long time now, but actually putting it into practice and seeing massive institutions like the NASDAQ exchange actually putting in an application for something like this, it's like, whoa, okay, this is actually sort of the baby steps to seeing a massive, plan like this be put into practice. So I thought that was very interesting to see as well.
I think you highlight something really important, and that is that there are still so many intricacies to be figured out here. And while we have seen so much progress in the last 6 to 8 months, there is still a ways to go. I mean, you mentioned DeFi there. You mentioned the conversation around conflicts of interest and the projects that the president and his family are involved in.
I mentioned a lot of things there. Sorry, I was
You really did. No, I love it. I love it. And I mean, you're known on crypto Twitter or X as someone who is well sourced with so many scoops. Just like curious what you're hearing in DC when it comes to both of those conversations around DeFi and then the conflict of interest one.
Well, I think right now, just that I think Dems aren't going to let up on either one of those. It's going to be, I think, well, less so on the Trump side, right? I think that's probably going to be, a fight to the death on that one, because they are really, I think a lot of Dems see this as just, the epitome of the issues in sort of DC, right? It's like that sort of revolving door issue that a lot of the Dems have, criticized for a long time. These industry people go to government and then they go to private sector. We've seen a few examples of that, I would say, in the last couple of weeks or so. And then they get big paychecks and they profit off of the work that they've done in government. And then you've got people like Donald Trump who start making money off industries that they kind of have a say over regulating. And, I'm not saying that the industry, loves that. I mean, you and I have probably had multiple conversations with people in the industry who, have strong opinions on it, that probably range from not so great to, to maybe a little like skeptical of it. I think, it's going to be an interesting battle that we're going to see on that one. I think when it comes to the DeFi side of things, you've got a lot of moderate Dems who are on board with this market structure draft as well. You've got the Mark Warners of the world. He's big on fighting illicit finance, but he's also, I think, someone who's willing to come to the table and to have those conversations and negotiate with Republicans. So I'm hopeful that, these closed door meetings that we keep hearing about, with industry, with these moderate Dems, those voices will hopefully kind of see sense and maybe hopefully drown out the voices of people like Elizabeth Warren, who might be a little less sensible when it comes to topics like this, kind of introducing data points from articles that might not necessarily be completely accurate when it comes to, to illicit finance that happens on blockchain, because as we know, it definitely happens, but is not the, the be all end all of, of crypto and blockchain. So, I'm hearing that it's going to be, it's going to be a tough couple weeks, but I think there's hope. There's definitely hope there.
Yeah, there's going to be a panel on illicit finance later on in the stream, so our audience can stay tuned for that one. I want to dig into this market structure legislation a little bit with you. I know you recently published a newsletter unpacking what we saw from the Senate Democrats and their framework for market legislation. What stood out for you? And then I'm going to ask you a question about what stood out for me.
Okay. So I guess what stood out for me was, on the face of it, how similar a lot of the principles were to actually what Republicans are asking for themselves, right? So kind of closing that market gap between, giving clear authority for the CFTC, having CFTC oversee the spot commodities, digital commodities, more disclosures around tokens, around regulatory guidance, safe harbors, hopefully reducing the need for litigation in the future. I think both sides can now agree that there's been way too much regulation by enforcement, and there does now need to be some clear rules of the road where we can just all kind of get along and not have to worry about spending millions and millions of dollars on lawyers. The two things that stood out to me as being obviously very different from the Republican side of thing was the Trump corruption and abuse and the illicit finance. I guess the illicit finance thing was the registering as banks with FinCEN and complying with BSA and AML. What it didn't specify in there was what kinds of platforms have to register as banks. It didn't specify what kinds of DeFi platforms. I covered the Roman Storm Tornado Cash case pretty closely. Is it going to be software protocols? The language matters here. And, I think there's going to be a fight over the kind of language. Those are the two things that really kind of stood out to me as being different. But overall, they seem pretty aligned. So I'm hopeful that, they can hash those differences out, hopefully, relatively easily. But what stood out for you?
Well, we're going to get to our next session very shortly, but this is what stood out for me. I mean, it's something we've seen a lot. It's very similar to the other drafts we've seen of the legislation, but it's that closing the gap and giving the CFTC more clear authority over non-security tokens. And it stood out for me, Eleanor, because I think we're down to a one-member commission right now. And we're really talking a lot when it comes to legislation about giving the CFTC real oversight over this industry. If most things are commodities, they are going to fall under the CFTC. Prediction markets fall under the CFTC. How do we move forward? It comes back to that intricacy I was talking about. Things seem like they're getting a little bit more complicated as they get more clear. And curious your perspective there. What have you heard? I know you're well sourced over at the CFTC. What's going on, and where is Brian Quintenz? When are we going to get a chair of that agency?
Well, it's a good question. I think there's talk that a certain CFTC acting chair may be having potential talks about moving on in the near future. So, it'd be my guess that they would probably want to move the talks along about who's going to be the replacement in the near future. We also would probably want to have a new chair of the CFTC in place by the time market structure passes, which, by Republican measures will be by the end of the year. So that'll be in the next couple months or so. By all indicators, it's soon, but I can't speak to a specific timeline, and also can't speak to a specific person. But I guess we will have to wait and see on that one. And to your point about the CFTC bit in that market structure draft, they also talked about making sure that there is bipartisan representation on both the SEC and the CFTC. Because to your point, there is just one person on the CFTC right now. And President Trump has not backfilled any of the Democrat positions, not just on the SEC or the CFTC, but also pretty much across the administration. So they kind of make the point that hey, when we have these, government agencies, it does not need to be just the president's party. It needs to be, other party, other representations as well. So we shall see.
We shall. All right, the room is just getting ready to reset. We're not quite ready to come back yet. So I'm going to ask you this as we prepare. As someone who covers the space all the time, what's that one under the radar story that you're really following that you think maybe people aren't paying enough attention to?
Ooh, that's a good one.
while you think about it, I can give you a
I was
fun
gonna
one I like to think about.
Yeah, you tell me.
Yeah, no, I mean, speaking of the CFTC, I just like have a lot of fun following what's going on with prediction markets. And I have to tie it back to what went on with Taylor Swift's engagement. There was a contract out there, when will Taylor Swift become engaged? There were people who made a lot of money off of that. And from the information we got in mainstream media was that there was a 2-week period where people knew that she was engaged. So I'm really interested in seeing, how regulators start looking at this. Is there an insider trading component? How is the CFTC going to look at this? Just like a fun one for me to follow, and I get to talk about Taylor Swift while I do it.
Wow. Wait, so do you think people knew that she was already engaged? Was it already like they had
Yeah,
already been engaged for a little bit before they announced it, and that's why people knew?
right. Yeah, no, that has been confirmed. People knew for 2 weeks.
Oh,
Obviously,
okay.
there's the ring maker, there are the families,
I
there's like
suppose, yeah.
the best friends. I don't know. That's a fun one that I like to follow.
Okay, interesting. I guess I'm also always, because I was down at the NYSE for a little bit when I was at Fox Business as a producer. So I'm always kind of following how crypto is like infiltrating Wall Street, as I like to say. But also Gemini's going public on Friday, so that'll be one to watch. I guess, the mass entrance of crypto companies onto the IPO scene. We've got Kraken coming probably soon. Grayscale will be another one to watch. It's a very overhyped, I'll say overhyped. It's a very overreported, I think, part of the, crypto market, all of the IPOs coming to Wall Street. But it is something that's very interesting, right? Because a couple years ago, it kind of ended with Coinbase in 2021. It was like, all right, Coinbase is the only publicly traded company on the crypto scene. And now it's like, you can't get enough of them. It's like these treasury companies, right? It's like a dime a dozen.
I know, 100%. I remember when everyone was calling it the year of the IPO, and now it's
It's
the
the
year
year
of
of
the
the DApp.
IPO. Yeah, and the DAT, right? Every day a new digital asset treasury company. All right, Eleanor, we got to get back to the stream. Thanks so much for joining me. I know that you are in Boston for Blockchain Week down there, so enjoy your time in Boston, and I'm sure we will see you soon.
Thanks, Jen. All right, see you soon. Bye.
That was
If we could ask everyone to please take your seats. Our program is about to resume. Please take your seats.
Let's see. Hi, everyone. I am Zanera Mazhar. I am the Vice President of Policy and Government Affairs for the Digital Chamber. Welcome back from your networking session. We are very excited to have you all here. Before we get started, I just wanted to let everybody know that Senator Lumis is on her way. She was on the floor voting, and her team has notified us that she will be making her way in about next 10 minutes or so. It is an honor and privilege today for me to have our Senator Lumis and Senator Gillibrand. Adam from Chainlink, he's the head of their public policy, will be moderating the panel. So very excited to have everybody, and I would like to welcome Adam and Senator Gillibrand to start.
Just
Yeah,
the two of us.
exactly. Yeah, right?
Because Cynthia's so busy.
Very good, and very comfortable chairs. Nice to see everyone. I was going to make a joke about getting less decentralized and moving to the middle, but maybe I'll leave that for later. I'm in a dad joke phase. But anyway, thank you all for being here today. Really excited to be here with Senator Gillibrand from New York, who really needs no introduction at all to us. As was mentioned, Senator Lumis will join us in about 15 minutes, and then we can talk to them together.
Obviously, Senator Gillibrand has been an enormous champion for crypto policy. I think we all owe her a debt of gratitude, and I'm just really, really thrilled that she's here today, so thank you. To get things going, and I'm not sure if there's anything you want to mention before Senator Lumis gets here.
It's her birthday.
So it is her birthday, so she will be joining us, and maybe there will be a surprise. But anyway, to start things off, we all know your work in crypto, the legislation, the efforts with your wonderful staff, Bill Rockwood over there. But I wanted to ask you how you got started thinking about crypto and really getting involved.
Mm-hmm. Well, you know, senators come from all over the place. Some are moms in tennis shoes, some are organic farmers, some are bankers. I was a securities lawyer, so I was always in the world of really complex commercial litigation and securities law. And so when I first started hearing about this interest in getting involved in regulating cryptocurrency from Cynthia Lumis, I was really intrigued because I thought this is a issue of first impression. We need to look at securities laws, commodities laws, banking laws. This is a potentially extremely disruptive industry in access to finance. And I had been involved in postal banking, trying to get our post offices to be a purveyor of basic banking, to do savings, to do checking, to do remittances. And it was a way to democratize finance. Well, the more I started to learn about cryptocurrency and blockchain technology, it occurred to me pretty quickly that this is another way to democratize finance. This is another way you can open up access to capital to the world, to the 30% of Americans that are unbanked or underbanked. And I thought that is very interesting to me because I never could get postal banking done. It was something that there was just constant impediments to this idea of making it easier for people to go into their local post office to get a bank account since they couldn't necessarily get to their local major bank because they couldn't actually get a checking account. They weren't a high net worth individual enough. So that's what really drew me to it. And so when I started hearing that Cynthia wanted to write the regulations around this new technology, I went up to her and I just said, Cynthia, I would love to work with you on this. And we just started from scratch. And it's been an amazing 4 years of working on this. And we learn a lot every day. And as you know, the industry has changed quite considerably over the last 4 years. There's so many new participants. There's so many new business models, so much new technology that's been able to be used. And so it's exciting and it's something that's very, very interesting and something that I know that I can use my securities background to make sure we get this regulation right so that the United States can be the leader worldwide and New York and Wyoming can continue to be the centers of this industry. And I want to maintain New York as the center of the world financial markets. So that's why I really put the time in because I think that's important.
Yep, and we're really glad you did get involved with the 60-vote requirement in the Senate. We know it has to be bipartisan, and it's been amazing work you all have done together. I do want to ask you about the Genius Act, which I think we still talk about it as being the easy one to get done, and maybe it wasn't so easy. But I'd like to ask you your perspective on working on the Genius process, what you learned in terms of working with your colleagues, and also working with folks like us in the room here today in industry.
Well, I learned that everyone has really significant contributions to make. I was really blown away by the interest level of so many colleagues to get their hands dirty and figure out ways to make our bill stronger. This was something that Cynthia and I thought was a pretty straight up thing. We just said, well, no algorithmic stable coins, make sure it's $1-to-$1 back. This isn't really complex, let's just write it up. But the contributions of all of the Democratic and Republican senators that wanted to be involved in the process were excellent. And what I really enjoyed was just seeing how they saw this issue, how they wanted to do their consumer protections, how they wanted transparency, how they wanted to work with local community banks and work with other stakeholders around the country. I thought was fabulous. And so The stakeholders in the industry were very much roll their sleeves up, figure out how do we regulate this. And for some people who want to go much farther than we went in that bill, I just want to get the industry up and running in a responsible, clear, and functioning way. And we can continue to improve various parts of the legislation over time. But it was so urgent to get basic rules of the road down so that, because there's going to be a lot of new participants entering this market without a doubt. And we just want to make sure that we have a set of rules that everybody can follow. And if there is innovation down the line, because those who want stablecoin to be able to offer more things, we can do that. It's just that we have to get a baseline to show that we're not going to collapse the world financial markets. We have to show that we can participate on a very healthy level with transparency, with regulation, and with consumer protections. And that's what we now have. Because we didn't have that before. We had participants who were doing what they thought was right based on what they assessed was the best thing to do, but there was no rules. There was no mandatory things you had to do. And now we can see which participants outperform other participants. We watch the industry grow, and then we can allow for more innovation.
That's great. That's great. Moving on to market structure, I think most of us in this room saw I guess I'll call it a memo from Senate Democrats yesterday on their views on the market structure legislation. I think most of us thought it was very constructive. I wanted to get a sense of your views on where things stand from a process perspective and maybe what we should be looking for as we move towards this September 30th or potentially September 30th markup.
Well, I thought the Dems principal document was very important because up until now, the only thing that we've seen is principles just from Dem Banking Committee. And I thought for this collection of Democrats who really want to write market structure, it was important for them to put down on paper how they see this issue and why they're so invested and why it's so important to write this legislation. So I was really, really grateful. I thought it was a thoughtful piece. I was very happy to sign my name onto it. I thought it was well done. And so it's a great place to start because it's just shared principles. And our Republican colleagues who read it said, yeah, these are great shared principles. And what it allowed for is an understanding that this is going to be bipartisan, that this is something where there are deeply shared principles on both sides that we can at least start from. And so our hope is that the Democrats can work on an outline or a draft that they're very comfortable with. When it's ready, share it with Republicans, then work on a bipartisan outline and eventually have a bipartisan bill. And that would be ideal because everything is always better when you start from a bipartisan place. Because there's certain things that are not in the Lumis draft right now that we want to put in that I think Senator Lumis and other Republicans are going to like. I don't think these things are contrary or conflicting at all. They just are different perspective on things like consumer protection or how do we regulate ramp on and ramp off of DeFi? What are the places we can provide some oversight that we don't have today that I think will be not only interesting, but possibly useful and supported by everyone. We also want to do some ethics. I think it's important to have this lens of ethics. It's something that really undermines the entire industry. For example, I want to ban stock trading by members of Congress and their families and administration officials and the president and the vice president, and we want to apply the same thing to cryptocurrency and blockchain because we want to create this ability where lawmakers aren't going to be seen as having their own interest, their own financial interest at stake when they're regulating. Now, whether we can get that far or not, I don't know, but eventually, we've never been able to ban stock trading. I wrote the bill 10 years ago to create transparency on your buying and selling. So maybe we can, in stablecoin, we were able to get transparency, and which I thought was great. We were able to say if you're going to buy or sell, that you have to disclose your purchase and sales, which is great, so you know if you're committing insider trading. But also, we didn't want members of Congress to be issuers. We didn't want them having a stake in this industry as the people making the laws. We would like that to be in the market structure bill too, a broader application. We would like to bind the president and the vice president, but we've never gotten that far in ethics either. We never got the ban on stock trading or the required disclosure of stock trading for them either. So it's all about a process of how far can you push ethics, even in this context, and it's worth trying. So I really want to have an ethics piece on this bill and see what Republicans are willing to do to see how far we can get, because it's important. And these laws don't actually come into effect for about 2 years. So at least bind future participants. Like it seems like a no-brainer to me, but we'll see. We'll see. But that I think is a place that Dems feel really strongly about, that we need some lens on ethics, because they're just, it seems to the public that this is just self-dealing, and it seems like it's breaches of the emoluments clause. It seems like it's a get-rich-quick scheme, and it doesn't seem fair. And so if it goes to this issue of fairness, we don't want to undermine government. We want government to be perceived as fair and honest and forthright.
If would you view that as effectively almost a line in the sand for Democrats at this point?
I don't think there's any line in the sand yet. We still have to write our document about what we're hoping to have, and I think we're going to begin to have good faith negotiations. But I just know that's very important to a lot of people. It's certainly very important to me. Yep. And I'd like to get the best ethics provision that's possible into this. When we do have a bipartisan draft, I want the best we can possibly get.
2 other follow-ups on market structure. Seeing that memo come out yesterday with the list of issues and looking at the calendar, and obviously there's other big issues in Congress, before Congress this month. How do you think it's realistic to be able to reach some sort of agreement in advance of a September 30th date?
Well, I don't want to put an artificial deadline on anything, because we're in the middle of negotiations about whether we're going to have a bipartisan budget. So the most important issue that Congress has to deal with right now is the fiscal cliff at September 30th. So that is a much more important deadline that the entire country is relying on. And so we don't have to give this, and we shouldn't. And I really urge you, please don't give market structure an artificial deadline, because it is so important for this industry that we get this right and that we do it on a bipartisan basis. The one that is a real deadline is the budget. So we have to do the budget, and it's going to consume a lot of people's time, because our goal is to have a bipartisan budget. We want to fund healthcare and NIH and education and literally everything, first responders, every part of government, our men and women in the military. We want to fund the government, and we want to do it in a way that shows all 50 states being represented and all Americans having a stake in what the budget looks like. So a lot of people are focused very intensely on that. I'm going to be working very hard on this. So it's not going to stop me from working at full pace to write and help write a good Democratic draft and then help write a good bipartisan draft. But I just wouldn't, I would urge people not to have artificial deadlines, because honestly, the weight of the budget is so heavy. It's very serious.
That's very, very helpful. I do want to ask you about another important piece to this puzzle, which you have a lot of direct insight into, and that's the Ag Committee piece.
Yeah.
And just to get your views on how you might be thinking about that piece of the puzzle here. We know a lot of the focus has been on the Banking Committee approach, but where do you see the Ag Committee piece fitting in, and when?
I don't know the timing of the Ag Committee, but I do know the ambition is to work on a bipartisan basis in that committee to regulate digital commodities. There was a lot of great work done on a bipartisan basis in the last Congress that Debbie Stabenow worked on. So I'm optimistic that we can take some of that work product and really augment it and refine it on a bipartisan basis. So I'm hopeful that the commodities part will be among the easiest part.
Yep. I want to turn a little bit to what's going on in the agencies. The SEC and the CFTC have been both busy. The SEC has been running their crypto task force for months now, and has been very engaged. The CFTC is now very engaged. What is your thought on what should be the proper balance between the efforts we have going on up on Capitol Hill and what the regulators are doing? Can they work in harmony? Are they going to eventually
I
come
think
to
we
a
can
T?
work in harmony. I think they are a stakeholder. They're going to be the regulators that are participating in this industry, because the SEC will have jurisdiction over digital securities, the CFTC will have jurisdiction over digital commodities and network tokens, and FTC might have jurisdiction over meme coins, like there's going to, and other NFTs. There's going to be a lot of jurisdictional choices that will be made in these drafts as they come out. And I don't know where we'll ultimately end up, but having the input from our regulators is vital. And so there's nothing wrong with the SEC or the CFTC putting out principles, putting out things that they want. But at the end of the day, this has to be regulated by Congress. Because if every administration's SEC chairman and CFTC chairman have a different perspective on things, that's called chaos. So we need laws, and we have to write these laws, but I am grateful for the inputs, and I'm very interested to see where Project Crypto goes. The principles they outlined were interesting. I didn't know what they meant in some of them. I don't know how far they would go in different areas, so I need to see what actually they're recommending to know how to maybe incorporate some of those ideas. But I'm grateful that they're interested in it, and I'm going to be looking forward to working with them.
Yep. In terms, two issues I want to touch on, illicit finance and DeFi. Maybe we'll take DeFi first. I feel like DeFi has in many ways become kind of like the third rail of crypto policy, very tricky to work around. But I wanted to get a sense of how you're thinking about DeFi. I know some members of the Senate Democratic Caucus really want to take action on DeFi. The DeFi community is very strongly unified against any sort of excessive regulation on that front. Tricky issue politically, but I wanted to get your thoughts on that.
Yeah, so if you start from what SEC chairman said, he says tokenization meets DeFi, enable tokenized stocks, bonds, and other assets to trade on DeFi protocols without central intermediaries. That sounds like a fine goal. The question is if there is a DeFi protocol that has a considerable amount of terrorism financing or illicit financing going on it, what do you do? So that's the question, and everybody in this industry should say, what do you do? In the same way when Backpages was overwhelming a lot of sex trafficking and drug sales. They didn't want to be regulated because if you remember this debate, it's just a very good, useful parallel. They said, we don't have any say over who sells what, but regulators at the time said, that's no excuse. You can't allow your site to be used for literally trafficking of minors. Like, it's such a bad thing. So we have to figure out, if you're looking at DeFi, how can you provide either guidance to the public or regulation to prevent these sites from being used overwhelmingly for terrorism financing or illicit finance? Now, there's a couple ways to go at it. Some DeFi protocols were created long ago and just live on the internet forever, and nobody does anything to fix them or move them or change them. And so the question is, well, who would you hold responsible? There's nobody in charge. That's question one. Question number two is there a way to tell people this protocol is being used for bad things and you should avoid it? So I'm a lawyer, and so I started thinking about these questions and thought about property law. So in property law, you learn about if you build a pool in your backyard and you don't fence it, and all the kids from the community come and swim and they drown and die, it's called an attractive nuisance, and you are responsible for that. So is a DeFi protocol that facilitates a ton of illicit finance and terror finance and similar? Is that the same as an attractive nuisance? Maybe. But if nobody runs it, how do you fence it? Like, who fences it? So the question I asked a lot of stakeholders that I'd love answers on is there a way to like create a geofence around a DeFi protocol that is being used for bad things to say, this is a place you shouldn't do business, and we're telling you not to do business here because they overwhelmingly are used for illicit finance and terrorism financing? That's interesting. I don't know. That's a technological question. Is there a way to do it? Is there a way to put a sign to say, don't swim here? I don't know. Tell me. So that's question one. Question two is a lot of people want to make it easy to use DeFi, and those are vendors you can regulate. So if you have apps that allow you to go on and off a platform, so the ramp on and ramp offs, you can do AML there. You can do know your customer requirements. You can do basic reporting and basic rules of the road for any business participant. That's a place where I think we can write really good legislation for ramp on, ramp off. And so we definitely want inputs on that if you guys have good ideas. But the question is the attractive nuisance question. If nobody really runs that site, I've been told you can't take it down. It doesn't come down. It's just forever there. So those are the questions that we have to struggle with. And those are the questions we're going to really spend time thinking. We want inputs, we want ideas from stakeholders, but we also want technology to be able to be efficient. And we like the benefits of DeFi. So how do you make sure DeFi isn't abused is the question. And that's a worthy question to answer from a technological perspective, but also from an ethical perspective.
That's very, very helpful. I want to broaden that out on the illicit finance piece beyond DeFi. A lot of provisions were added into Genius on illicit finance, on KYC, AML. What are your thoughts from market structure about illicit finance in general? Should more be added into the bill, or do you feel this is something that was handled, at least for stablecoins, appropriately in Genius, or would you expect to see more added to get Dems on board?
Well, I think you have to, we only opined on what to do with stablecoins. So of course you have to have illicit finance provisions for what you're going to do with digital commodities, what you're going to do with digital securities, what you're going to do with network tokens. And I think that's appropriate. So we'll figure out what's needed. But a lot of illicit finance and know your customer law already exists. Like the reason why market structure should use as much existing rules of the road as possible is because it already exists. You don't have to recreate. You don't have to reinvent the wheel. Like you can use, there's so many protections now for securities and commodities already in place. So the real question is if you have this other bucket called network tokens, what illicit finance do you want in there? What types of know your customer AML do you want in there? And I think you're going to borrow a lot from stuff we've already written, but also what happens in securities law and commodities law. So don't be afraid of the current structures that exist because they keep market participants safe. They do consumer protections. They allow for competitiveness, and they make sure that in this industry that people who are breaking the rules don't get ahead because they're cutting corners. And every legit participant wants to make sure someone breaking the rules doesn't take their market share. So it's really important for market stability, for sure. So I don't think it's something we need to be afraid of. It's something that we have a lot to draw from that people are quite comfortable with already.
Got it. Okay, that's great.
Like in stablecoin, we use the Bank Secrecy Act. Like the Bank Secrecy Act has all that AML and know your customer requirements. It has all those laws. So we just said this if you are an issuer, you are under the Bank Secrecy Act. It makes it very easy. So the same type of applications we'll use in market structure. So it won't really be new stuff. It'll be applying the same types of laws to the places they're already applied.
Yep, understood. And talking about bank secrecy, talking about banks in general, I think we've seen TradFi, I guess what we all in crypto call the banking industry. TradFi has certainly evolved.
Where is Cynthia? She's supposed to take all the hard questions.
She's coming.
I am getting all the hard questions.
And they're only getting harder.
This is so not fair. She's supposed to take them. Is she coming? When is she going to be here? 30 seconds.
I got three more questions on DeFi to go through.
More softballs and hard ones for her.
Yeah, exactly.
Something. Go ahead.
TradFi, it's getting complicated. We got some who are definitely benefiting from the increased activity in crypto, some who are playing roles as custodians, some who are going to launch stable coins, some who are seeing this as a competitive play. Maybe I'll pause here.
Happy birthday to you. Happy birthday to you. Happy birthday, dear Cynthia. Happy birthday to you.
Well, this is pretty memorable. Thank you.
Great to have you join us.
Thank you. I'm sorry I'm late.
It's okay.
No worries at all. We've been having a great conversation, and I think Senator Gillibrand is glad to see you come up on the stage.
Just starting the hard questions.
Yeah, we're starting to go deep on DeFi, so I think she's glad to see you. So thank you for joining us.
Happy to be here. Thanks.
Maybe since you are here now, the question I think that I'd most like to hear from both of you together is what you've learned about working together in a bipartisan way in the Senate. It's pretty impressive that you guys have come together and really pushed forward legislation in a big way. So I'd love to hear your thoughts on how it came to be, how it's gone, what you've learned. So I'll maybe turn it over to you first.
Yeah. Well, it turns out that I am not only fortunate, but truly blessed that it was Senator Kirsten Gillibrand who wanted to partner on this with me, because she has a unique ability to cross the aisle and yet be completely true to her core values and her party's longstanding principles. That's a unique gift that is unique to Senator Kirsten Gillibrand. It is. And so what's been great about it is we've been able to talk completely honestly with each other about where we're going to encounter political headwinds and try to figure out ways to resolve them. The other thing is that we have staff that are almost interchangeable in terms of their deep knowledge and the trust that we have in each other. So I trust her staff as much as my own, and I think vice versa.
Yeah, we love working together, and we had a really, really profoundly efficient and effective working group during the whole stablecoin thing. And we together have paired on market structure for the past 4 years. So we have a deep knowledge of reservoir. We've been asking these tough questions to each other for years now and trying to figure out what will work best. So we've had a lot of benefit of time to work together, and I've gotten to not only know her staff, but we all debate these issues. Just as the ones I raised today, we debate them all the time and say, what's the best way? This is an issue of first impression. There are no laws written to address this. And her state deeply cares about this issue, as does mine, and so we've been very committed together to do it.
Yeah, in fact, even last night, Senator Gillibrand and I were kicking around an idea in the hall that she had about network tokens.
Yeah.
And I thought, that's brilliant. Let's talk about it more. She's going to come up with some language. We're going to share it and talk about it more, and it could have a major impact. And even though we've been working on it for 4 years, there are new ideas, because during those 4 years, this industry has changed too.
Yes.
So we're going from a place where we were trying to learn what areas of market structure were the keys to rationalizing policy. Then we saw what was happening in the enforcement actions at the SEC, how they informed our draft. We've gotten input from people over the years who gave us new thoughts and new ideas about how to proceed, and it continues to this day. So I would say, with regard to one of the things that we learned on stablecoins, I thought it was going to be easy. I said, let's start with stablecoins, easy peasy, then we'll get to market structure, that's going to be harder. And what we learned is it was not easy at all. And so the process that the Senate usually uses to get legislation passed doesn't necessarily work for this asset class, because it's so new. As you said, it's all a case of first impression. Mm-hmm. And so you don't have a body of law that you're trying to amend or reform to conform to current practices. This is all new. And because of that, it has made a very different approach to legislating necessary. And Senator Gillibrand is leading that effort in her conference.
I do have to ask you, since I know we're coming up on time, we heard from Senator Gillibrand on her perspective on market structure. I do want to ask yours. We saw what I think many of us view as a very constructive memo yesterday from Senate Democrats.
Yeah.
But get your perspective on where we are at in the process and what a timeline may look like. We're all focused on September 30th, but wanted to get your views on that.
Yes, I am still focused on September 30th, as is Chairman Tim Scott of the Banking Committee, to mark up the securities side of market structure. We're still 3 weeks out from that hearing, so having yesterday's memo from the Democrats was extremely helpful. I thought it helped inform my side of the aisle about how little differences there are between the draft that Senator Tim Scott put out over the weekend and where the Democrats are. But it gave some sideboards to the discussion, which 3 weeks out is what we need. What are the areas of disagreement? How are they confined? And so we can spend our time addressing those and bringing ourselves closer together. So I remain optimistic that we will have a markup on September 30th in the Senate Banking Committee. Then in October, Senate Ag will go to work. The product that the House Ag Committee put out on commodities I thought was pretty solid. G.T. Thompson, who chairs House Ag, has a pretty good working knowledge of this subject matter. And we'll continue to work with the Senate Ag Committee. Are you still on Ag?
I'm on approps now.
Okay. I'm on banking. She was on Ag, which was another reason, and she was on Intel. And there's so much illicit finance.
DeFi is the thing for Intel. It's the thing that Mark Warner is most interested in, because the illicit finance and the terrorism financing. So it's great to have us on these three committees because we have a deep base of knowledge of the underlying laws.
Yeah, and without her participation on the Intel side, we'd be in trouble. We'd be missing a major piece of this. So it's another reason that she's the perfect partner. I think we're going to get there. I think we'll have a bill before the end of the calendar year. I'd like to see us have a bill signed before Thanksgiving. That might be too optimistic, but I think we're going to get it done before the end of the calendar year. Done. And then I am going to take Senator Kirsten Gillibrand out to a very nice dinner, and I'll buy the champagne or whatever you want to drink, because this has been a journey. And to draft a piece of legislation out of whole cloth, the way we have, case of first impression, as you said, has been a remarkable journey. And I think it's a journey that very few, even senators, get to have.
Yeah.
And the interesting thing is it sort of tees us up for artificial intelligence and Web3 issues, because they will all sort of build on the experience we've had here. And so we finally have a very small but deep appreciation and working knowledge for what we're getting ourselves into. And I just want you to know that we breathe this every single day.
Yeah. And nobody else really wants to. So we're fine.
Yeah, exactly.
Like it's not an issue that everybody wants to become experts on. So we're grateful that we have each other to think about these new issues and come up with good ideas.
And I think that's a absolutely perfect place to end this conversation. I do just want to say on behalf, I can't speak for all the industry, but really on behalf of all the industry, thank you both for your leadership.
And we have a very special announcement. They sang for Senator Lumis over in DC. I'm not going to sing because I think that everyone might leave the stream if I did, but I just want to start by saying happy birthday to Senator Cynthia Lummis. And thank you all for joining our CoinDesk Policy and Regulation morning sessions coming to you live from Washington, D.C. We heard from SEC Commissioner Hester Peirce, Comptroller of the Currency Jonathan Gould, Representatives Tom Emmer and Richie Torres, and Senators Kirsten Gillibrand and Cynthia Lummis. The conversations so far have been productive, and the resounding message really has been engage with regulators early and often. The way forward is a collaborative one. Some highlights for me this morning were SEC Commissioner Hester Peirce warning that securities laws don't cover all areas. She said, quote, "Don't assume that if you're buying a meme coin that the big bad SEC is going to come in when your meme coin drops in value and rescue you." Some valid advice, I think, from Crypto Mom there. Invest in meme coins at your own risk. Tom Emmer and Richie Torres' banter was incredible. Rep. Emmer said something that really stuck with me. He said that in the House Financial Services Committee, quote, "We're all wearing one jersey." He was really highlighting the bipartisan support for crypto. And my conversation with journalist Eleanor, I think highlighted that too. That both sides of the aisle want to get legislation across the line. Now, that said, there are still some sticking points, right? We just heard from Senator Gillibrand, representing the Democrats, of course, that when it comes to DeFi, illicit finance, and conflicts of interest with the president, there are still some things that need to be worked out. Senator Gillibrand said during her keynote, "We need some lens on ethics because it seems to the public that this is just self-dealing." She added, "We want the government to be perceived as fair and honest." Now, you can continue to follow all the latest updates when it comes to crypto regulation and policy on CoinDesk.com. For now, we are going to take a break for the morning. We're going to come back to you at around 2:25 p.m. Eastern Time, live on CoinDesk's website, X, LinkedIn, and YouTube, where we'll be listening in to a conversation on combating illicit finance and a congressional keynote from Congressman French Hill. So set your alarms. I'm Jen Sanasi. We will see you back right here later.